Hello, everybody. Um, so we are 4 days till October at this point. Um, so this will be the last video I make for the next couple weeks, as I have to focus all my time on the 10/15, October 15th deadline that's coming up. And then I will post weekly videos again after that. So just as a reminder, if you have not turned in your stuff to your CPA, I highly recommend you get it done at least by this weekend. Um, I imagine most of my peers, most CPAs, are probably doing the same thing that I'm doing right now and scrubbing our lists of remaining tax returns to complete for 2024 to see who is actually getting done by the deadline and who is not. And the biggest deciding factor on that is if you've received documentation and work papers and files from clients to be able to complete the tax returns. Typically, at this point, as an industry, we are no longer reaching out to clients to say, hey, send us your stuff. If a CPA firm actually even has the policy of reaching out, a lot of firms don't reach out, period. They just wait for clients to turn in their stuff and assume that if you turn in your stuff, you want us to file it. If you're not talking to us or turning in anything, we're not worrying about you. So anyway, enough of that soapbox. Um, get your stuff into your CPA if you haven't yet so they can get things done. Okay, so this week I actually want to kind of pivot a little bit and not necessarily talk so much on any tax saving strategies or filing stuff. This week I even debated talking about this in this kind of forum, in a public forum. Normally, I have this conversation in an initial consultation or when a client specifically asks. However, for this week's topic, I do want to talk about, asking the question, who does your CPA work for? Um, I had an initial consultation with a client the other day, and frankly, I was just kind of flabbergasted with the service that they were getting from their tax professional. And and so I just wanted to kind of address that. Where does it come from? Why do my peers do certain things, um, and give you the advice they give you? So basically what I'm talking about is, does your CPA or your tax advisor work for you, or do they work for the IRS or other government regulatory body? Um, and unfortunately, this most CPAs typically live in the gray area. Tax law, like any law, is written to be vague on purpose. And then it's up to the courts to determine if something falls within the statute, the regulation, whatever. Um, and so everything is open to interpretation in law, and tax law is the same way. And some things are actually pretty black and white, and other things are very open to interpretation. Uh, an example I love to use is there's a regulation that states that if you are a shareholder and officer in an S corporation, meaning you are an investor, an owner, and also working for an S corporation, you are required to receive reasonable and fair compensation for your services rendered to the corporation. I didn't state that verbatim, but that's pretty much the entire regulation. Um, no definition of what is reasonable and fair. basically the guidance kind of goes back to what is the dictionary definition of reasonable and fair. So it's completely open to interpretation. One person could say, well, a reasonable wage is 300,000 a year, and another person would say it's 20,000 a year. And that could be for the same business, just two different CPAs offering different advice. Um, so what I kind of take this back to is ultimately we're all just practicing our our job. We're practicing interpreting tax law, and that's the advice we give. Now, some people interpret things more conservatively than others. And so that's what we mean by who does your CPA work for? Now, this kind of goes back to really college. And why are CPAs generally so conservative? And it's because we're not actually tax people by, I mean, let me rephrase that. I am a tax guy, but we are not trained to be tax guys or tax people or tax advisors. That's just something that came over time because no one else was really doing it. So we are actually trained as a certified public accountant to CPA. Um, we are actually the public's watchdog for publicly traded companies. That's ultimately what we are. We are the public's watchdogs for publicly traded companies. And we are trained to audit publicly traded companies so that the shareholders can have a warm and fuzzy that the company is not doing something that would negatively affect them. Uh, so it is completely impossible for a team of auditors, say maybe 10 people, if that, if you're lucky, to audit a Fortune 500 company, a multi-billion dollar company. They can't go in and physically look at every single transaction. So instead, we are trained to analyze our risk and mitigate our risk based on statistical analysis, really. So we run statistical analysis and basically say, okay, so these are the things we're going to look at because they are materially important to the financial statements. And then some of all this other stuff we're not even going to touch because ultimately it's immaterial to the overall nature of the financial statements. For example, multi-billion dollar industry or multi-billion dollar company couple thousand $100 transactions, so you're looking at a couple $100,000 in expenses, is very, very immaterial to the full extent of the actual company. So if somebody was embezzling a couple $100,000 through $100 transactions, there's a good chance as an external independent auditor just certifying the actual financial statements for the shareholders, they'd never find it. Um, because it's immaterial. And the company can't afford to pay these auditors to do that much detail. That's why the companies have internal accounting departments. And so basically we're trained to be analyze our risk, mitigate our risk through statistical analysis. And when we analyze our risk, we say, hey, where is the highest possibility that I'm going to get in trouble? So I sign a report that says, hey, these financial statements are materially correct. And ultimately, it's the public who I'm the watchdog for that's going to sue me should something negative happen. For example, Arthur Andersen was a big four firm. They were the auditors for Enron. Uh, Enron did some unethical accounting practices that hid issues from the financial statements so that the shareholders couldn't see them, nor could banks. So ultimately, those things led to the bankruptcy of Enron. And because Arthur Anderson had agreed to those things and they knew about them, ultimately, they are no longer a firm. And some of the partners went to jail because they misrepresented the public. Well, so as an auditor, you analyze your risk that, okay, I'm going to get sued by the public, so I need to have these mitigating factors in place so that if I'm sitting in court, I can say, hey, I did everything prudent of a CPA to protect the public. Now in tax, so that's what we learn in college. Now in tax, basically we had this tax thing come along, and as an industry, we said, hey, you pay taxes based on net profit in a company. We understand net profit because we audit and create financial statements. So we're going to take on this tax thing. And so we just kind of took it on as an industry. And then everybody sits down and analyzes their risk like we're trained to do in school. We analyze our risk based on where's the biggest consequences. And the fallacy here that a lot of CPAs, a lot of tax advisors, the trap that we fall into is we go, oh, my risk is the chance that I'm going to have my work audited by the IRS or other government, like state government or something. Um, but in all reality, worst case scenario, um, I get a slap on the wrist. Maybe unless I was actually negligent, which is a legal term for did something really bad, um, I'm not going to lose my license. I'm not going to go to jail. And ultimately, the taxes are the clients, regardless. Now, they might assess some penalties, but ultimately, the penalties we can get forgiven, get covered by insurance, all sorts of stuff, right? So the risk isn't for as the preparer, as the CPA, as the tax advisor. The risk for me is not the IRS. The risk for me is the fact that I misrepresented my client from their intentions and now I have a malpractice lawsuit. That is much scarier to me than the IRS auditing my client. Um, and so because of that, as typical tax advisors, we fall into the trap, the fallacy that we think the IRS is our biggest risk. Um, then we tend to make decisions and provide advice based on decreasing your chance of getting audited, which is auditing our work. Because we don't want to look stupid. Ultimately, that's what it comes back to. Um, but in all reality, that's the fallacy. I should be doing everything to represent you and how you want to portray your taxes, and I should provide you advice based on what you're trying to do. Now, that could mean a lot of different things, like we talked about in the beginning, is it's all open to interpretation. So am I interpreting things to benefit the IRS, or am I interpreting things to benefit you and you understand the risk? So my job is not to work for the IRS and make sure that the IRS makes money. My job is to work for you and provide you with enough information to make an informed decision based on your risk tolerance. So, when it comes to reasonable compensation, like I said, some tax advisors go for a much higher number than others. And so, well, why? And it all comes back to interpretation. So are you comfortable interpreting something more aggressive as long as there is a good reason for it? And that's really what it comes back to. So who does your CPA work for? Does your CPA just say, no, 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 you can't do that? Or do they say, hey, let's talk about how we could do that what the risk would be, and do you accept that risk as the taxpayer? Because it's not, if you want, as long as you're not taking a straight up illegal stance, my job, I'm actually covered by what's called Circular 230, which is a publication by the IRS about for paid tax preparers. And for this particular thing, as long as something's not straight up violating the law and you tell me that you want to take it as a stance on your tax return, I'm actually required to do that. Um, so if you come to me and you say, "Hey, I want to take a home office deduction and I think I qualify, and here are my numbers," technically, I'm required to accept that. I'm not going to come inspect your home. I'm not going to come and actually tell you no, you can't. My job would be under Circular 230 is to accept that what you gave me is accurate and I'm going to report it. Now, a good CPA, a good tax advisor might actually say something about it, like, well, do you actually qualify? Let's talk about how aggressive we want to be. Let's talk about some of our risk things. Um, but it shouldn't just be a flat no, you can't do that. Um, and it should actually be a flat yes if we're going to flat anything. If I'm just going to respond, it should be yes, okay, I'll include it. And then we make sure we report it in the most correct possible way. Uh, so that's really how things are supposed to work. And you know, that's what you should find in your CPA. Your tax advisor, your tax strategist should not just be a no, 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 you can't do that. It should always be let's have a conversation about it and determine if you accept the risk associated with any expense, any stance, anything that we do. So that's really what you should be finding in your CPA. And it really should be more of a relationship where they are working with you directly and helping you establish the best tax strategy that's going to lower your taxes and not constantly just say no, no, no. Um, and if you see something online, you should be able to bring that to your tax advisor and have a conversation about it. There's a lot of stuff out there that's wrong, there's a lot of stuff that's right, and there's a lot of stuff that's really somewhere in the middle. And you just have to understand your risk tolerance. So anyway, that's kind of what I want to talk about today. Um, and who does your CPA work for? And that's the question. Do they work for you or do they work for the IRS? And so hopefully this is helpful. This isn't, these videos are always something that I wished everybody would watch. Typically the clients who watch these don't need this type of advice, but hopefully, if you're having a conversation with a friend and they're just complaining about their tax advisor, this is the type of video you could direct them to. Like, hey, who does your tax advisor actually work for? And do you feel like you're getting the service that you should be getting? Um, anyway, uh, have a wonderful weekend and hopefully everybody meets the deadline without any problems. See you in a couple weeks.